Welcome to Finance Gyan Plus YouTube channel. Today I have brought a problem related with working capital management. Now let's see the problem here. This is a problem related with working capital management. Now what are the informations given here? Let's see now. The KPP Corporation daily turns out 1500 units of a product at a cost of rupees 6 per unit for material and labor. It works 360 days in a year. The level of inventory at the beginning and end of the year are rupees 2 lakh and 94,545.45 respectively. The KPP allows its customer 40 days in which to pay for the product, which is 10 days later than credit periods of net 30, and the firm generally pays its supplier in 30 days. So these are the informations given here. So from these informations you have to find what is the current cash conversion cycle, what is the amount of working capital requirement, what is the working capital turnover. Now suppose the firm toughen its collection policy with the result that all customers paid on the sharp due date, that is net 30. What will be the cash conversion cycle? So here by using these informations you have to find these 4 items. So now let's solve this problem. Okay, let's first write given here daily output is 1500 units, and here of a product at a cost of rupees 6 per unit for material and labor. So this is your cost of goods sold per unit, cost of goods sold per unit, that is your rupees 6 per unit. Okay, then here days in a year, 360 days, days in a year 360 days. The level of inventory at the beginning and end of the year is rupees 2 lakh and rupees 94,545.45. So here you can write here opening inventory this is your rupees 2 lakh, and closing inventory, ending inventory, that is 94,545.45. Okay, so now other informations are also given here. KPP allows its customer 40 days in which to pay for the product, which is 10 days later than credit terms of net 30. So here receivable conversion period, RCP, shortly you can write, that is 40 days, and the firm generally pays its supplier in 30 days. So here that is your payable deferral period, PDP, is equal to 30 days. So here in the first you have to find current cash conversion cycle. To find current cash conversion cycle you have to find inventory conversion period, and to find inventory conversion period you have to find inventory, average inventory and cost of goods sold. So here now first let's find the average inventory. So now according to the question, here you have to first find the average inventory. Equal to opening inventory plus closing inventory open to. So here let's put the value. Opening inventory is 2 lakh and closing is 94,545.45, and your denominator is 2 So now you can get here average inventory 2 lakh plus this is your 94. That is your rupees 1,47,272.72. So this is your average inventory. So after you find average inventory, you have to also find the cost of goods sold. So here cost of goods sold, you have to find the cost of goods sold in annual. Okay, it's a daily output is given here, it's a 1,500. So you have to convert this daily output into annual. You have to convert into annual, and then you have to multiply with the cost of goods sold per unit, and then you will get the cost of goods sold, annual cost of goods sold. So here you have to find here. So daily output into days in a year into cost of goods sold per unit. So this will give you cost of goods sold, that is annual. Okay, so here you have to find the annual cost of goods sold. Now next you can write here, now daily output 1,500, days in a year 360, and cost of goods sold per unit is 6. So that will be your rupees 32,40,000 is the cost of goods sold annual. Okay, annual cost of goods sold you have found here. Now after you find the annual cost of goods sold, now you can find the cash conversion cycle by finding inventory conversion period. Now let's find the first one. A is your calculation of current cash conversion cycle. Shortly you can write CCC. So here cash conversion cycle CCC equal to inventory conversion period plus receivable conversion period minus payable deferral period. Okay, so here you have to find the inventory conversion period. So now you can write in working note inventory conversion period, inventory conversion period, shortly ICP, equal to here average inventory into days in a year divided by cost of goods sold. Okay, and that will be your average inventory is here 1,47,272.72 into days in a year 360, and then divide by cost of goods sold 32,40,000. So that will be your that will be your 16.36 days. So inventory conversion period for KPP company or KPP corporation is 16.36 days. So now you can put the value here 16.36 plus receivable conversion period is here 40 days minus payable deferral period is 30 days. So that will be your 26.36 days. So cash conversion cycle for KPP corporation is 26.36 days. Now after you find cash conversion cycle, now you have to find the working capital requirement. So to find the working capital requirement, here calculation of working capital requirement, shortly you can write WC. So WC, working capital requirement, WC equal to, here you will need cash conversion cycle and cost of goods sold per day to find the working capital. So here cash conversion cycle CCC into cost of goods sold per day. Okay, so here that is your cash conversion cycle is your 26.36 here into cost of goods sold is 32,40,000, which is divided by number of days, that is 360. So that will be your rupees 2,37,240. So this is the working capital requirement. After you find the working capital requirement, now you have to find the working capital turnover. Working capital turnover. So here now calculation of working capital turnover. So here you can write here WCT shortly. Okay, so or you can write working capital turnover, you can write here same thing, equal to cost of goods sold upon working capital. So this is your formula. So cost of goods sold is your here 32,40,000 and working capital is your here 2,37,240. Okay, so that will be your 32,40,000 divided by working capital 2 lakh. So that will be your 13.65 times. Okay, so working capital turnover is 13.65 times. Now after you find working capital, now next you have to find is, there is a condition given. There is a condition given there. So if the this firm toughens its collection policy and makes the customer to pay within 30 days, what will be the new cash conversion cycle? So here, calculation of new cash conversion cycle. If the collection policy is toughened by the company, that is net 30. So here it will be now, according to the question here, it will be receivable conversion period will be 30 days. According to the question, receivable conversion period will be 30 days. So now let's find the new cash conversion cycle. New cash conversion cycle equal to inventory conversion period plus receivable conversion period minus payable deferral period. So inventory conversion period, it's here 16.36 plus receivable conversion period 30 days minus payable deferral period is also 30 days. So that will be your 16.36 days. So in this way you have to find the new cash conversion cycle. So if you like my videos, please like, share and subscribe.